All right, guys. Thanks for joining another session. Yeah, so the recording bot just is having an issue today, so I'm going to be recording manually. I might just try to do about 10 to 15 minutes just using manual recording, and then see if the bot works again while our tech guy works on that. That way I don't have 2 hours to upload, and I can get this to you pretty much faster than if I have YouTube just try to upload the whole thing. The cool thing about the bot is that it's like live streaming on YouTube just privately, and so it's almost instantaneously available. But yeah, let's go ahead and check out Bitcoin right now. So Bitcoin is just a little bit stalled at resistance here. As you can see, we've been butting our head on this diagonal for quite some time. Now, we did have a breakout this last week as there was some type of indications that, of course, the war was ending. And so people were getting a little bit enthusiastic. There was a little bit of depression in the market here, but Bitcoin held its lows pretty well. Not only did we not come back to the measured move of that head and shoulders that we had up here, or that inverted head and shoulder. No, it was regular head and shoulders that we had right here. Let's see, something like that. Okay, we had this head and shoulders right here, and we had a measured move on that one, all the way down to this bullish order block. Not only did we front run that, but we also completely avoided this bearish shark harmonic. So BTC really does not want to pull back, and that's very strong in such concerning conditions. So I can see on Bitcoin in this chart, just from the sheer amount of panic that was in the world, that Bitcoin is still acting very strong, and we should take a cue from that. We should not be overly bearish. I understand that every alt out there is going to have some issues, especially as BTC is kind of, a little bit heavy-handed in its dominance. It's sucking up all the money in the room, basically, from crypto. But we should still be bullish, because when money does start to distribute into altcoins, and when the Fed does officially pivot, then that should be an opportunity for risk-on assets like altcoins to take advantage of it. So we're still going to be looking for opportunities. Really, the entire tariffs narrative put a pause on Jerome Powell's cuts. There were a lot of projections that showed that tariffs in the amounts being discussed would increase inflation a little bit over the threshold that was necessary to cut rates. And so as long as that tariffs issue is up in the air, it's going to be an anchor around our necks. And it's good to see that we're finally getting some type of deals officially, where even the Chinese side admits it, with China. Now, we did have a little bit of an issue here with Canada today. So again, markets are they're just not sure what to make of all of this, and they just may want a little bit more waiting time. But basically, I think July is supposed to be that big negotiations month for the tariffs. We can see that China is already getting done. Canada and Europe still have some hiccups. A lot of these countries will probably start coming to the table to try to get their country a deal, because this has just been going on for too long, and it's causing instability in their markets as well. So it's in their interest also to settle this. Additionally, we're having a little bit of stalling on the spending bills in Congress, but the United States does have to pass a spending bill eventually. And so we are going to be looking for, essentially spending on the congressional side to start get earmarked. And when those bills get passed, of course, that's another form of liquidity, not just the rate cuts. And then, of course, the Treasury and the Fed can always play some shenanigans and change some rules with the banks so that they can issue more loans, right, with less collateral, this type of thing. And, that may be small for any one particular bank, but when you spread it across all the banks that issued debt in US denominated values, then it actually adds up to quite a bit of money. And as the US is going to have to refinance its debt, there's also a lot of pressure on the Fed to actually cut those rates sooner than later, because the U.S. needs to refinance at a lower rate. If rates stay high, then we just can't fund our government efficiently, and they're higher than expected already. So I think eventually the Fed is going to cave in. But for all of these reasons, and then also because the market looks forward, the market doesn't look what was happening or what is happening right now. The market is always looking forward, right? Because they're taking a risk on what's going to happen in the future. That's how they get a reward. And the market is still going to be looking forward to Trump eventually replacing Powell and putting some type of lackey in there who maybe is a little bit less concerned with inflation and a little bit more concerned with keeping the markets going. And so my expectation is that in 2026, by the end of the first quarter, we'll see that new guy come in. Maybe he has to get established a little bit, and this entire market could get a second wind by the end of the second quarter. So even if Jerome Powell plays hardball, even if he stakes his entire reputation on fighting inflation during this term and really is stubborn, eventually the market is going to price in the fact that we should be getting a more generous Fed coming into 2026. And my theory of the market is that even if they drive the train off of a cliff, right, economically, in terms of the United States, by doing this $5 trillion spending, by cutting rates when really we should still be a little bit tighter, and by doing some kind of crazy multiples in terms of leverage on what banks can issue in terms of loans, all of this, is a house of cards that can very easily collapse. But even if they decide, if they decide to go in all that reckless direction, it's actually going to be ironically bullish for markets. Okay, markets will love that. Okay? They want to get that last hurrah. They want to get that top to the market that's super exciting, and then they want to distribute on everybody as they take their profits. Okay. Now we've been consolidating for a very long time in this range. You can see here's the top, here's the bottom, here's the top. And we're putting a lot of pressure on the top. Very scary things in the world isn't pushing us down. And so again, I really have to have an overall bullish perspective. And I think a lot of the shenanigans in the market is just wearing people down so that they can't participate, and so that the moneyed interest, and so that the big powers and the institutions that are trying to take the biggest bites out of this market, as we get set to kind of pivot a little bit more away from the dollar, a little bit more towards Bitcoin and some maybe other exotic, changes in, the world of finance to come over the next maybe 5 to 10 years. I do think that we do have to keep that open mind strongly to the upside. Additionally, this is having the pattern over here of a big bull flag to me. Okay. And so I do expect, if we do break north, I would expect a minimum of getting up to that 120. And again, guys, I still see 150K on the table. So this could excite markets quite a bit. Even if we don't get to 200K, even if we stall out at 126 or 150, I do think that at some point that Bitcoin money is going to, just make the decision that we've got enough Bitcoin for this cycle. And maybe the thing that has the relative value is the altcoins. So this is all my kind of just short market update for you guys. Okay, so that was about 10 minutes of a short market update, just so that we can kind of orient ourselves and understand why we're still looking for opportunities in altcoins, even though technically this has been a very bullish Bitcoin cycle, right? This has been Bitcoin, 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 and maybe again Bitcoin, but we are still waiting for that opportunity where they just say, you know what, we've had enough Bitcoin, Bitcoin has appreciated enough, gold is starting to look toppy, all of these kind of conservative plays are looking toppy, and now it's time to start going, into silver, into some of these other things, into Ethereum, into altcoins, okay? And if the Fed starts easing officially, despite all those fears about inflation and the spending bill and the tariffs and all of that, and they go into a loosening period where they start easing on the interest rates, then my guess is that all of this money is going to start taking a hard pivot into those altcoins that are now super low. Okay, so there's my theory of the market. I just want to explain what we're doing here. I know a lot of guys have been chased out of the market. You can see just how slow it is. Okay, I think, you know, you can see, like, even at fresh popping groups, you know, they've lost about half of their membership in the last 30 to 45 days. Okay, it's just people have been worn to the absolute bottom in terms of the altcoin market, which is why I have been giving consistent updates on Bitcoin, 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 Bitcoin since the very bottom of the market, and as Bitcoin dominance has been spiking. And I've just been saying, take 25 to 35% on bounces on your altcoins. Please ingrain that in yourself, because until it's actually altcoin season, until the Fed actually makes that pivot, until the money starts flowing from Congress, from the Fed, and you know, until that debt gets refinanced in the US and all of these things, it's just going to be a very tight market for altcoins. And so the best you can do is just compound your 25% bounces over and over and over again. Stack those sats, you know, put it into Bitcoin while it's Bitcoin season. And then when you have a pile of cash, make that decision on, you know, where you want to hold in terms of altcoins once the Fed has pivoted and is actually cutting rates, which it has not been doing. Okay, it has not been doing that. And of course, in the macro, we'll let you know when that happens. Now, some people may ask, you know, why are there fewer plays, right? Why are there fewer recommendations on certain weeks, right? Versus sometimes you just have like a bunch of charts that you're super excited about. Well, it's because I'm designating certain areas as where I want to get you guys in. And then here I'm going to be listening to your request. I'm going to be taking request. But, you know, guys, like, we're at resistance, right? We're at resistance here on Bitcoin. So would it make sense? Would I be a responsible manager of a business if I was trying to get everyone in right here, right? Versus when I was screaming to the top of my lungs that we're going to take these opportunities and that there's a couple opportunities in alts. And then once we pivoted above the top 50% of this range to the upside, you know, we're now overheated again. Okay, that's ripe for pullbacks. We got pullbacks. Bitcoin is showing a lot of strength, so we're going to still be looking for opportunities. But just understand, the timing is everything in trading. And just because there's a week or two that's slow, that's usually just part of resetting for when we get those big opportunities. I hope that this market pulls back one last time into that 200 daily EMA, sort of like what we did back here. I'll give you an analogy, okay? Here's back here where we kind of spring-loaded to reset to the upside, and we broke the 200 daily EMA. We broke the 300 daily EMA. We firmly grabbed that golden parabola, and then we launched off of it, right? But before we launched off of it, what did we do? We had a short-term failure. That was a false start. We had another short-term failure that came back to the 200 daily EMA. We had another short-term failure that came back to the 200 daily EMA. And what happened? We made the 200 and the 300 daily EMAs our springboard into that bullish play. So we got a total reset followed by a couple false starts, 3 false starts, in fact, into the 200 daily EMA. And that's when the market had accumulated enough. That's when the market had the signals that it was ready to go. And that's when we just launched to Valhalla. So here you can see we did something very similar in terms of, you know, this move and maybe this move, because we had this breakdown to the 200. We lost the 200, then we lost the 300. We resecured the golden parabola. But what we didn't get, right? We didn't get this reconnect with the 200 and 300. We didn't get this reconnect with the 200. All we did is we went into outer space. Now, this could be considered an attempt to reconnect with the 200. I would really love to see us have one last shakeout. In the numbers that we got today, we did have some numbers that would be considered stagflationary. Okay, we had spending going down, we had wages coming down. Basically, the market is showing some struggling with the GDP in earlier numbers this month. We're having a little bit of hiccups with jobs, and then also inflation rose a little bit. Now, I don't know exactly how the markets are going to interpret that mixed result, but my expectation is that in a stagflationary environment, the US is going to have an obligation to serve its debt, even if it decides that it's slightly more inflation than it can tolerate. Okay, and so I think Jerome Powell is eventually going to be broken down by this, even though his fears are kind of coming true that inflation is being a little bit sticky and the tariffs might be coming back, right? But the U.S. has to refinance its debt. We have to get liquidity back into the treasury, and these things are going to be very important going forward, and there's going to be a lot of pressure on him to do it. So my bias is going to remain to the upside. My bias is going to be that, yeah, exactly, like these pauses, like Steve's talking about, that these are going to give Jerome Powell some cover to do the rate cut maybe next month at the earliest, okay? Which I'm really leaning towards a rate cut next month. I said to you guys a month ago that I did not think that they were going to cut this month. I do think that they are going to cut next month, but we'll find out, okay? However, in the meantime, yeah, I saw that. Yeah, so that I addressed that in the beginning, Steve. You can go ahead and watch the playback when it's done. But yeah, that's exactly, you're exactly on point, okay? So this tariffs issue is still up in the air. We're getting a little bit of stagflationary readings. And so the market could use that as an opportunity to reject again. So just like we had this breakdown right here, just like we had this breakdown right here or right here, they could pull back a couple more times headed into July, you know, maybe the middle of July, we don't know. But that would create that kind of bottom structure, that accumulation a little bit closer to the 200 EMA as the 200 EMA pulls up there. And that could provide the launch pad, the bottom of the market, just like right here. It could provide the bottom of the market. Any more pullbacks, any more chop and grind in this area for a spring-loaded launch to the upside, should the Fed actually decide to make those cuts in July. Okay, so I want us to be looking out for that. I think that, you know, the best opportunity was here. Some of our alts have still been a little bit depressed because technically that was a Bitcoin launch. It wasn't an altcoin launch. And you'll notice that there is a certain pattern in these launches where the first launch often is Bitcoin taking out the low. Okay. And then it's only these retracements and on the kind of second launch that altcoins start to catch up. Okay. And that they go. So altcoins are often like making a new low when Bitcoin is making its higher low. And we saw that down here at the bottom where altcoins just went into pure depression when Bitcoin made this higher low here. We saw that down here. Bitcoin made a little bit of a higher low off of this little low, just on a little local level, but altcoins were still bleeding like crazy. Same thing happened here. Bitcoin altcoins jumped off a cliff, and you're seeing the same thing happen right now. Bitcoin technically is attempting to put in a higher low, but altcoins are attempting to commit suicide. Okay, but it's usually false. It's usually false. As long as we hold my golden parabola and we use that 200 daily EMA and that 300 daily EMA as a launch board, and we just kind of consolidate along here into this edge and make that kind of, that kind of swooping structure, right, into this, then that means that the springboard is loading. The tension is there. And if the Fed just releases the pin, right, it could explode to the upside. That's what we're looking for. And then once we see that Jerome Powell releases the power of the market to the upside, now the counter argument is going to be making, because remember, the markets are always looking towards the future and the next move. And so they've been driving up, waiting for this moment. And once that moment comes, what are they going to be waiting for? the reversal of it, right? They're going to be waiting for inflation to come back. They're going to be waiting for the next pause. And so that means that their mentality is going to be, okay, wherever we explode to, now we're going to start looking to distribute. Okay. And as they're distributing their Bitcoin, they're going to be taking opportunities on some other coins in that liquidity environment. And then, they're going to be taking their profits on those things pretty fast. That's why altcoin season doesn't last very long. Okay. So I put a little bit of macro into this session. However, I think we've been going on that for about 20 minutes. So let's just go ahead and jump over to the main event. And let's take a look at some of these requests we got. Well, let's go ahead and just take a look at ETH just really quick. And you can see that we're still pumping off of that entry that I gave on ETH. Of course, we just kind of filled in this range. You saw this wick back here where it ended down here. We had some consolidation. We used it as resistance. And then what I suggested is that we could break down and come back to that area. That would have been a good entry. It kind of looks like ETH wants to put in some type of inverted, some type of cup and handle, just like one of these really sharp, pointy ones. And so what I would say is that you might want to give this area the benefit of the doubt. ETH may try to carve out a handle off of this cup over the next couple weeks, right? Maybe the next week or two, carve out some type of a handle here. And then, there might be some type of shakeout or shenanigans as it tries to kind of recapture its 200 and 300 daily EMA. If it does that, that's basically like a natural support level, okay? And you'll see that effectively what happens is that this thing is going to have a measured move up to $3,000, just like what it hit here. And if you kind of zoom out a bit, you'll notice that this is then creating a big inverted head and shoulders. Yes, there can be we always know that there's shenanigans at the end of every pattern, but what we'll be waiting for is for the flip of that level. If you're not getting in on this handle here, or if you didn't get on this low that I have been talking about for weeks that we could reconnect with because of this wick back here, then of course you're going to want to see, do we flip that 200, 300 a daily EMA on ETH, take a chance to 3,000, 2,800 to 3,000. And then of course, once that shoulder is completed, then we actually have a pretty solid measured move up to this $4,000 area. So if this is happening when the Fed is easing, then you can imagine that not just Bitcoin, but also Ethereum will be pulling our high caps up with us. Okay. A lot of those reliable coins in this, in this season, and also a couple of the kind of dying, like a dino coins will get dragged up with it. I'm not saying they're going to take out their all-time highs or anything like that. I'm just saying some people are going to start getting excited and they only know about the old dino coins, the big old high caps and all that stuff. And so probably we're going to see some opportunities there. Now, if we jump over to total 2 ES, which is excluding Bitcoin and stable coins, you can see that we have that same type of bull flag look that I was pointing out on Bitcoin. And so, And so if we do get this bull flag to play out, right, we could easily see something like this, right? And then we also have this type of a structure that we can reconnect with and maybe even do a throw up into this area. And then we're going to have to play it by ear from there because we're going to have some pretty solid diagonal resistance should we get up to that 1.5 trillion mark. But this market could easily double. Okay, this market could easily double. And that means that a lot of these high caps have room to run, even though they are high caps. Okay, a lot of the dino coins have room to run, even though they're dinos. And then what's going to happen is that if ETH is running and Bitcoin is starting to kind of lose steam or get distributed as the guys who accumulated it during the first transition of the Fed, now that the Fed is going to be transitioning again, they're going to be looking for the next thing. So they're going to be looking for ETH and some of these high caps. And that's why I want to come at this session looking at some high caps. Even though you guys didn't request it, I got some feedback that, sometimes guys, they just don't know what to request. And so they would appreciate a couple recommendations from me. I think you get a lot of recommendations from Reddit. He goes through a lot of lists, like in pretty fast, just to take a look at what's available. And then you can just come to me, just make a request. I want to look at that coin. However, if you do want some just suggestions from me, absolutely, I'm willing to give them. You can just make that request. And right here on total 2ES, not only do we have that gigantic bull flag, which really isn't valid until we're back above its 200 and 300 daily EMA, but it's also making one of those little bull flaggy formations. And so that would suggest that it could pop up, knock its head on this bullish control zone, and then kind of consolidate there above its 200 and its 300. And that could allow it to break out. Okay, that could break out of this downtrend here, and that could lead us into the launch. Now let's go ahead and take a look at these requests in alphabetical order. I'm just going to go ahead and put it up on the side here. You can see that we're going to go ahead and take a look at all of these coins right here. Okay. Now this is a lot to get through, so bear with me. Here on Arrow, of course, we did already give a entry on this. I'm not really sure what to say after. We already have kind of a 5-wave structure. We do have 1, 2, 3, 4, 5, a 5-wave completed structure here. You can see that we've kind of broken down on this first trend, so we can see that momentum is slowing. As long as we're above the 200 daily EMA on Arrow, of course, I'm going to continue to be bullish because it did just bump its head on that and then get reset, but then it broke through it. And as long as it can hold it, I'm going to continue to be bullish. We do have some higher targets of around $1 to $1.15. Where I'm going to get a little bit nervous is if we do firmly lose that 200 daily EMA and then we lose the neutral point of 73 cents, then I would just watch out, and I would probably be looking for just some type of lower targets at a bigger discount, and then watch out to see if this thing distributes to the downside. Okay, but again, as long as we're above around 73 cents, gonna give it the benefit of the doubt. Not super enthusiastic unless we get above, really the MACD is saying about 83 cents. The 300 daily EMA is like 81 cents. So pretty much the same thing. Let's see, you thought you were just going to pause it. Yeah, let me see if I have a notice from the tech guys here. Let's see. Go when you see this. If you want to start the bot, restart your stream. Okay, let me check and see if this works. Thanks for the note, Trillis. Yeah, just 1 second.